Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody is weathering the movement in the stock market. All right. Welcome, everybody. Okay. So happy Tuesday, everybody. CPI day. All right. So let's get started. Pull up your charts, everybody. If you want to subscribe to the newsletter, hit the link below. I am going to start another class probably in the week before Christmas. Hey, how you doing, JT? So a couple themes I want to touch on that I've been talking about. In the Twitter I put this was a classic buy the rumor, sort of, right? Sell the news. If you guys have heard that one. Yeah. So what happened is leading into this, and I actually talked to my members about this, so I'm not going to spend a lot of time. If you guys want to join me for 5 free days, I actually cover this quite a bit, and I go into a lot more detail. Clearly, I cover a bunch of charts. Yep. Hey, how you doing, John? Nice to see you. Welcome on board, buddy. I'm looking forward to working with you. Yep. So buy the rumor, sell the news. So again, just real quick in a nutshell, you notice that we had a huge rally starting, basically over the weekend, right? Remember, we had rollover on a bunch of the equity products, and we actually started the rally. If you look at your charts, pull up your charts right now, the S&P futures, we started that rally Sunday night, right? And it carried literally till this morning after the CPI, right? And so basically, there was a short squeeze, more or less. I think because a lot of people were positioned short going into the CPI, expecting again another, because of Friday, I think, and because of Friday's PPI. I think everybody, and we had some put call ratios, and I don't know if you also noticed the VIX jumped yesterday, which is really unusual. So all told, what ended up happening is we got a short squeeze going into the CPI. We had that huge pop, which probably got all the balance of the shorts really squeezed out, and then the thing came, and then the longs came in and took some profits. And by the way, coincidentally, if you pull up your charts, again, everybody should have your charts up. We came right up to that pivot high, 4180 basis, the continuous chart. And if you're looking at your continuous chart of the S&P, you see there's a couple of pivots. We came right up to that pivot, took out that pivot, and really sold off about, that high was 4180. So we sold off over 100 points. So we had a pretty nice, some pretty nice swings today. But all in all, we're right back below 4,100, which is the breakout. And so again, are we going to be back to the same old, same old? Well, tomorrow we got one more kind of big catalyst tomorrow with the Fed, and then we'll go from there, right? Oh, good for you, JT. Yeah, there were some good breakout opportunities there as well from this weekend. Coincidentally, I'm going to probably do a class on that coming up here. Start doing some of that in our sessions, because there's some really great opportunities from that on that perspective. So if you want to learn something like that, join me for 5 free days, and we're going to start covering some of that as well. Okay. All right. So big swing today. Literally ended up not that far away from where we started the move, right? If you really think about it. And so unless you're super active, right, pretty much we started the move this morning at around 40, 50, and we're sitting almost right at exactly. Yep. And that's the kind of markets we're in right now, and again, very challenging unless you're super nimble, unless you understand what you're doing. So let me kind of give you some ideas of what we're doing. So we came in this morning with a volatility play on the SPY. We were up pretty nicely this morning, and then obviously came all the way back. But we're sitting right near our strikes right now, so we're gonna, we're anticipating another big move tomorrow, which would, obviously help in volatility. When you're trading volatility, you actually embrace big moves. You don't shy away from them. You don't fear them, and that's part of the things that you do in the options now. So that's one thing. We also, by the way, just to give you some, we shorted silver, so we got filled on silver this morning with again those correlations I talked about with you guys here. Um, you know, the spike higher in the S&P pushed the dollar lower, i.e., all the currencies popped and the metals popped. So I've been writing about that. By the way, if you haven't subscribed to my newsletter, I've been writing about that for the last several weeks. And so we got short silver 24.25 and a half. We use the SIL contract. So we're up pretty nicely on that one. And it's a free trade because typically what we do is we move the stop once we hit a certain, at least 2x, 3x, and then the stop goes to entry. So we actually have a free trade. We're going to let it all play out. We were up almost 500 at the lows on that position. And that is also acting as a hedge, ostensibly, if you think about it, because, the way the dollar moves and the inverse correlation with silver. If stocks tank tomorrow, we should hit our target on silver because that would push the dollar back up, and by correlation, should move silver back down again. Now, on the dollar, let me just shift gears real quick here. The dollar basically has to hang on to. We're at some very critical levels in the dollar, 103 and a half. So I've been talking about this kind of accumulation area between 104.20 and 103.40. It did get a nice little bounce off that, which is actually what's helping our silver position. But if it breaks 103 and a half, essentially, and that would have really precipitated that would have been a follow through rally all day today in the stocks, which didn't happen, obviously, right? So stocks didn't get any kind of major follow through. So these correlations are very, very strong right now. Okay, and one of the things, again, as a trader, if you're out there trading and struggling and you don't understand these correlations, you're going to get hurt, right? Because basically, and by the way, if you're just blindly trading currencies, not understanding that if stocks rally, the dollar's going to go down, i.e., you can't be shorting currencies, you're going to get hurt. Does that make sense, everybody? So if you're looking through all the currencies, they all had a nice rally today, right? Across the board. Now, here's the thing: a lot of these currencies are now hitting some major distribution levels. Look at the Swissy. In fact, the Swissy came right up to a distribution, pulled back hard. We got the yen. I've been talking about the yen. That's coming up. British pound. Also, we have the ECB and Swiss banks all coming in on Thursday morning with their rate announcement. That would be after the FOMC here in the U.S. So we have FOMC tomorrow here in the U.S. and then we have the ECB on Thursday and Swiss bank. So we still have a bunch of stuff to do. Especially, we're going to shift gears probably tomorrow here at TTS and start focusing on currencies and metals. We're already silver, we're already in the short silver. basically with a free trade. So if the dollar decides to bounce hard from here, we should actually hit our target on that. Okay, so yeah, a lot of great levels setting up in the currencies now, which could portend again some lots more movement in the S&P. Clearly, now one of the things about the S&P, if you look at your SPY, uh, we are holding above 400 in the SPY. And so if we can hold on to 400 tonight, through the night, with the S&P basically holding, that coincides, by the way, on your futures, coincides with around the 440 area. If we can hang on to that coming into tomorrow, we could get another test of those old highs in the SPY, which is around 414, and in the S&P, which the high again, to reiterate here, the high to be tested again would be around the 4180, 81 area. Okay, so those are obviously key levels to be looking at tomorrow. And the kind of swing we had over 100 points today, should expect that tomorrow in the last 2-3 hours of trading. Okay. Now, NASDAQ, again, right back. Again, it was kind of a false breakout. Remember, we were talking about this 12,115 level. Again, looked like it was off to the races this morning. We came back and we're essentially right back into the range. So nothing really changing there. Not a lot to discuss. Whether again tomorrow is finally the day that we actually get some follow through. And what I mean by follow through is follow through means we come all the way back down to the bottom of the range and then fall through and keep going lower, or we actually get a durable, if you will, a durable rally that is sustainable throughout the day. That's going to be really fascinating tomorrow, right, everybody? So I mean, nothing even in the last couple of days, as like we had the PPI, the market went down and then it went, rallied right back up again. We had that sell off on Friday that I talked about with you guys here. And then, that right back up again. So we keep getting this back and forth, kind of running in place, if you will, where essentially the S&P has gone nowhere now for over, 6-7 weeks. And, and again, it's frustrating a bunch of people, bears included, right? Because the bears keep talking about new lows, and we got to retest the lows and break the lows, and they got sideswiped this morning, right? In the last couple of days, they got beat up, and yeah, it's a frustrating, challenging environment if you're chasing and doing all that. So you gotta know what you're doing and be super nimble. But also on the same token, you're getting some monstrous moves. But here's the thing: I want to really stress this again. By the way, why do I not like labels? So think about this. I've talked about this in the past. Because today, these last few days has been a great example of why I don't subscribe. What do I mean by labels? What happens, and I'm going to ask you guys, we got a few people in here, right? What happens if you are just like a perma bear, right? So there, we have two types out there, right? We have the perma bears, which it's basically all negative. Market's going to go down. We just short everything. Every time we just short, right? How are those folks doing literally in the last 3-4 weeks? Question. The perma bears, the folks that just focus on shorting, so on and so forth, right? You get my point? On on the same token, what happens if you chase every rally because it crossed the 200-day moving average or whatever? How's that been going for you? So here's my point to everybody is, what if instead you caught a 100-point move to the upside in the last, two, 3, 4 days, from Sunday, which you could have on the long side, by the way, then maybe went and waited for another strong rally and then shorted and so on and so forth. You get my point, everybody? But again, if you get yourself too locked into this or that or the other, you're always going to be probably chasing it on the wrong side of the market. Does that make sense, everybody? So this is why buying low and selling high, you've heard this 100 times from me. In the long run, that's going to work out for you much better because, again, the trend followers, they're going to, again, they probably got trapped on the last rally because they crossed the 200-day moving average, this and that, whatever, higher highs, all that kind of nonsense, whatever, right? And then all of a sudden now they're, so anyways, that's my little rant for today, everybody. Okay. So my point to everybody is stay focused on buying low, selling high, wait till price gets extended to the upside, then short it, wait for, sentiment to get really bearish and then get long. Isn't that right, everybody? How have you done with that versus all this other stuff, right? That anyways, okay, moving right along, guys and gals. Man. Oh boy. All right. Anyways, so yeah, and at the end of the day, we really haven't had anything to do. In fact, no, I think they're going to do 50, JT. Yeah, I think they're going to do 50. Right? Yeah, I think 50 is kind of locked in. But as I mentioned in my market overview this morning for my elite members, it's not really like even today the CPI number is right, JT. The CPI is absolutely, it's really irrelevant. It's really more important of what the market's going to do because again, just what I just got done talking about. What if you followed the news? You saw the PPI, you saw the hard rally this morning, and you chased it because CPI is down. Boy, here we go, off to the races. Let's buy it, and then you got smacked. Right, JT. So you get my point, everybody, right? And so again, when you're asking me 25, 50, okay, great. Whatever they do, it doesn't matter really, right? If they do 25, they do 50, whatever. I mean, you can anticipate that if they're going to do 25, the market probably rallies. But then what happens? That's the 25 that comes out at the thing. Then at the presser, when they start asking, Powell a bunch of questions, he basically tells you, look, we got, we're gonna break the back of inflation no matter what. We're gonna keep raising, blah blah blah. We're all that kind of stuff, and then the market does the way reverses again. So, anyways, follow the charts, JT. Right? Just look at your charts, everybody. Just look at your charts. I mean, charts are if you just kind of look at your charts for what they are, and again. Even like the Dow had a really nice rally up until that. You remember that level? What was that? 3,562. It dropped almost like 1,000 points, and then finally went through again. So that was a shorting opportunity in the Dow because the Dow had rallied like massively, 29K up to 35K. I mean, you talk about a rally, right? Okay, so I digress, everybody. Sorry, you got me going there, JT. All right. Let's finish up with energy. Remember, we talked about energy, right? So all over the place. We had that a nice bounce off of close to 69. I think the level I gave you guys was 69.72. Came up shy of that again, rallied. Now we're bumping past 75 and kind of pausing. Again, extremely volatile. And I'm still, longer term, still super bullish on energy. And that includes nat gas. Now, I think I mentioned, I don't know if I can't recall. I think I mentioned we were trying to get long nat gas at the gap, the Sunday gap. Well, we actually had the orders in and we didn't quite get down to that gap, which is at 633 and a half. And we turned right at 660 on nat gas futures and then rallied hard again. And now we're sitting at 7. And again, not lots of chop again. And so in a nutshell, if you're looking at your nat gas futures chart, I would just say this: 7. Look at your daily chart, weekly chart of nat gas. 760 down to 5. If you just use those as your parameters, and essentially when you're falling closer down to the $5 range and you set a buy or look for some levels down there, and then as you get up into the $7 to $8 range, set a sell. That's going to be your play, and anything in between is going to be a little bit more kind of less probable. Does that make sense? So that's the way I would treat nat gas right now. Massive swings, but location. We talk about location. Location is everything when you're looking at these markets. Okay. Anyways, that's really what it is. Now, lastly, and I'm going to get out of here. Grains. Grains also kind of challenged right now. So there's really not a lot in the grain markets that I'm really interested in. There are potential breaks. I think I mentioned the soybean meal the other day with you guys. I was here on Tuesday, last Friday. That did fall off pretty good. And remember, I mentioned that there, if it got a little bit higher, there were some really nice levels in soybean meal. If you haven't traded, that's $10 a tick. Okay, so check that out. It did actually fall pretty nicely. It went from 475, which essentially was a pivot resistance area. If you're looking at that chart, soy meal went from 475, traded all the way down to 443, which is actually pretty nice move at $10 a tick, right? But the bigger level is going to be higher. And there's some pullback levels that I'm looking at in soybean meal. So again, if you have not traded soybean meal, check it out. Just make sure you understand the volatility in that. Let's see. JT 659 in corn. Yeah, nice job. Yeah, I looked at that one. Yeah, that's a pretty nice drop, kind of a wick over wick kind of level. So you got a nice move out of that, right, JT? About so far it's only 59. You were 52 and a half. So yeah, it's not bad. Location's not ideal. It's kind of right smack in the middle of the move, but yeah, you're doing good with that. We could drop all the way down to 644. So you're not going to get like massive, hopefully. Do you trade for 3X primarily, JT? Yep. Yeah, right. No, yeah, that's a nice. Actually, I think there were a couple of members. A couple of my members actually did take also spotted that. I actually, I go through I go through these levels every single morning with a bunch of people. So again, you want to spend a couple of days with me, see what I'm doing in the morning, and just take away some levels if nothing else. Okay. All right. So yeah, good job there. So we did pull back a little bit, 52. So that's actually doing nicely for you. And then the meal, I think that's, by the way, JT, do you trade meal at all? Yeah. So, by the way, oh, you haven't? Okay, but you do look at it, right? So soy meal basically is I am a meal in Spanish. Right? Get it? Soy meal. That's my dad joke for the day, everybody. No. uh, I think JT got it. All right, everybody. I'm gonna get out of here. So listen, tomorrow another volatile day. Exactly, JT. Exactly. So again, everybody, tomorrow another big day. Obviously, Fed. We can expect some huge moves again in the again across all the markets, right? Particularly the dollar and the equities are where we're seeing all the action. Even bonds didn't move a whole lot today either. Bonds barely moved. We had a nice pop in the morning and then that kind of just died down. So, uh, okay, so be careful out there. Please understand what you're doing. Again, very challenging environment. If you need some help, if you want to spend a couple of days with me, again, hit the link below. I'll be glad to. And don't worry, I'm not going to chase you around to be a member or whatever. I'm not yet. It's up to you. So, anyways, all right, everybody, have a great rest of your week. Hopefully, you guys do well tomorrow and the next day, and I'll see you at the end of the day on Friday. Okay. All right. Take care, everybody. Have a great rest of your week, and I'll see you on Friday. Take care.